Welcome to the Captain's Blog. I am David McDonough, Senior Vice President at Trilogy Financial. On this blog, we try to take what's unnecessarily complicated out there in Wall Street, make it understandable to you on Main Street. So we tape on Friday mornings. Last Friday, the market was up fractionally, all was well. And then the tweet came out, 100% tariffs on China. Market took a turn for the worse, down 2.5% for the week. Up 11 for the year, and only, folks, down 3% from the all-time high. Did that negativity continue this week, or did a new tweet come in and save the day? Here's your week in review. Let's cut right to the chase. The taco, T-A-C-O, you figure it out and Google it. I'm going to call it a negotiating tactic. Came in on Monday, said, don't worry, folks, all is going to be well with China. The best day on Monday in 5 months. It goes to show you out there, folks, that timing the market is what? It's fool's gold. Again, you know out there in Flagship Nation, you also invest for fundamentals. Well, earnings reports came out this week, and again, 80% of the companies are beating them. The banks came out, strong balance sheets, and also pointing out that you out there, as the consumer, are still spending, just more particular in what you spend on. So again, as of this taping, as of Friday morning, the market has recovered half of what it lost last week. Now here's what to look for next week. Again, I do believe that this is a buy the dip market. Why? We have the Trump put. When the market tends to go down, he takes that personally, and a certain tweet or positive headline will come out. We also have the Fed put. The Fed is going to, folks, in our opinion, lower rates this month and again in December. What does that mean for you? It means lower credit card bills, lower home equity lines, auto loans. Again, you're seeing it when the mortgage market, we're now at a one-year low. And lastly, I said it last week, where it comes to a deal with China, I do expect more positive headlines to come out of that negotiation, which will continue this positive trend towards year end. Now, here's your personal finance tip of the week. As I just mentioned, the market is only off 3% from an all-time high, but a number of you out there are still feeling more pain. Those are the folks that are investing in individual names and gambling. The FOMO stocks, the satellite companies, AI companies are all taking a beating. Folks, you're investing for fundamentals. This is not a casino, although Bob out there in Flagship Nation believes it is. Folks, get the odds in your favor. Stay diversified. Don't bet in this market. Don't time this market. It's time in the market, not timing. The last cliche of the blog this week. So thanks again for checking. We'll see you next week on the Captain's Blog.